Vinay, whenever I meet you, I'm excited because I would say that both of us were there when young India started consuming like crazy and we enabled it. And I was telling you, we don't get to enjoy it because we've got to a stage where we can't do certain things, right? Let's start with summarizing this consumption story in India. It's been fascinating. 2015, I'd still talk about Louis Philippe, Van Heusen, and all of them. Right. Things have changed.
Right.
And you said that it would change back in 2018. You said it's going to explode. Let's summarize. Where are we?
Yeah, I think if you look at this statistically, when we met back in 2013, we had about 30 million internet shoppers in India. Today, about 180 million internet shoppers shop online in India. The total number of internet users back then used to be about 250, 300 million. Today, it's about 750 million plus minus.
Okay. That's crazy.
The pace at which consumers are moving from just being internet users to internet shoppers has gone up significantly over this last 8-year period. And that has led to an explosion in the number of brands that have got created.
Yeah, absolutely.
What's interesting was when we met in 2018, we were talking only about a few categories like fashion and BPC. Today it's electronics. Today it's home electricals. Today it is home appliances. It's got into home care. It's got into grocery. There are lots of these impulse categories which we didn't ever talk about. We said, yaar, Haldirams can never be challenged. Or, Cadbury's has a very strong position given distribution.
Yes.
These are all 10 rupee, 20 rupee, 30 rupee price points. But then 22 quick commerce happened. And suddenly that whole impulse category products exploded.
I agree.
So today you have a Hoko ice cream, right? This is challenging Quality Walls and Amul. Today you have Slurp Farm, which is challenging Nestle. We are still waiting. We have a Street Karam Coffee, which is organizing a Murk and Ribbon Pakoda market.
Which is South Indian category.
Yeah, that doesn't have a Haldiram's equivalent and they're creating the category. We're still waiting on who's the new Britannia. We're still waiting for who's the new Fruity. We're still waiting for who's the new Coca-Cola. So I think while consumption has motored on, it's never been more exciting than today for us to look at what are the possibilities of the next 5 years.
It's interesting in the days when you were in an FMCG company and I was in legacy media,
Right.
Long 2008.
Yeah.
People would say, okay, India is going to be a 1 trillion consumption market. And it was driven by, retail consumption.
Right.
With that, you can't go by those numbers. It's going to only explode into something else, right?
Yeah.
Quick commerce is one thing.
Yeah.
The retailers will have to learn about quick commerce. A lot of the legacy brands are now trying to figure out quick commerce, whether they should do it. I see new partnerships happening.
Right.
And new brands are happening all the time.
Right.
You said impulse purchases, impulse purchase of toys, impulse purchase of shoes, right? Shirts at 200 rupees.
Absolutely.
I don't know why. It changed because of UPI, would you say?
I think UPI is a kind of like an enabler to enable consumers to buy brands easily or make purchases easily. Similarly, delivery or Ship Rocket or Ecom Express is an enabler that enables consumers to receive products into their homes. I think the key driver here is in 2017-18 when we were talking last, back then, India was at a GDP per capita of $1,850. Today we're at $2,500. In the next 5 years, India at 2030, we are going to be a $4,000 per capita economy.
It's going to happen and inflation is going to be managed.
Yeah,
your thoughts on that?
Today's Economic Times front page, our WPI is negative.
Yes.
Right?
Yeah.
So that's not great. So it's always a balance. So I think inflation will be managed eventually. Obviously, we live in a VUCA world. Lots of things keep moving around. Geopolitically, there are tensions across various parts of the world. Oil prices, etc., still do get choppy and excited. And we are a net oil importing country, and therefore our propensity to import inflation is higher. But I think through policies, through the PLI policies, through the manufacturing tax policies, through regulations, I think the government has made a lot of efforts
REV policy,
REV policy.
insistence on solar energy.
Absolutely.
All that's going to change things.
So
Yes.
those things are changing.
Yes.
So both through regulation and through policy making, I think we are not only managing growth, but managing growth in a sustainable manner. I'm pretty optimistic that this 6 to 7% growth rate at our population is stabilized now. We're not
Correct.
growing population
Correct.
anymore. So that if you just compound this $2,500 of GDP per capita over 6-7% over the next 5-7 years, you're talking of $4,500 per household.
And
That's an interesting metric to me. Now,
this will be still young India,
absolutely.
bachelors, bachelorettes kind of thing, or family.
Till 2040, we don't need to worry about aging in India.
Okay.
If after that people stop having babies, we have
then we'll see. Yeah.
We'll see. But interestingly, what has also changed over the last 7-8 years is we always talked about India 1 or the top 30 million, top 50 million households. And then we have a V-Mart that comes along. We have a V2 retail that comes along. So I think India 2 or Bharat is also exploding at the same time, right?
It's interesting you say that. I would have never thought that these things would happen. GST, UPI fallen because of Geo fallen costs, and then new retail happening.
Absolutely.
I mean, and you said that India is going to have no problem till 2040. Agreed. And your favorite categories would be what? All types, including food? Would it be food experiences? Would it be home type of ready to cook? I don't know. Are we going the American way in the 50s, 60s? You know what I'm saying?
Yeah.
Microwavable, fast.
Right.
But India is on another level of pricing. I don't know.
Yeah.
Everybody is now trying to figure out the segment that they want to go after. And you're right. It's not just that 100 million, the 30 million that became 100. It's 750 million.
Right.
I've seen kids play games.
Yeah.
Then do impulse shopping immediately.
Yeah.
Somewhere they must be earning money.
Right.
So I'm trying to figure out, is it what is happening? And then there's AI where they say job creation may slow down. But India seems to be spending because of, you said the same thing, manufacturing. It's growing. We will manufacture more, thanks traditionally, product-linked schemes. My question here is, it's confusing to read India, man, at this point of time. But everywhere I go, they say they're betting on India. I think India will consume.
Yeah.
Where is that money going to come from? I'm just confused now.
Yeah.
Is it be rural still promoted by agri growth? I don't know.
I think agri growth will be range bound between 2 to 5%.
Yes.
I don't think agri growth is going to be the driver. I think services continues to be a driver for.
So we'll be a services economy another 15 years for sure.
Continues to be driven. I think a lot of regulatory policy changes over the last 5 years have started bearing fruit now.
Yes.
You know, the first chip has rolled off the Indian factory.
Yeah, that I heard. Yes.
In Gujarat. So manufacturing of integrated circuits and chips is a big focus area. Lots of investments have gone there. EV manufacturing, a lot of investments have gone there. Especially after the trade wars and geopolitical global tension with China, apparel manufacturing has suddenly seen reinvestment. So the capex investment cycle that we hadn't seen over the last 15 years has started happening now. So my view is that manufacturing will also, defense as a sector, for example.
Yeah, you read it right. A lot of my clients are in the defense space.
Absolutely.
Yeah, and that's going to grow. Drones.
Drones is going to grow.
Yes.
Right? So there are new manufacturing areas where these investments will happen, which will... Now, for example, today, India is the largest manufacturer of iPhones.
Correct.
Globally.
Correct.
As a single country.
Yeah.
Who would have thought that 3 years ago?
Never.
It happened. Both, which is our favorite common investor conversation. They have indigenized 100% of the manufacturing. More than 50% is manufactured in India. The rest is assembled. So, now all of these changes have happened in the last 3-4 years.
Yeah.
So I think manufacturing will have to come to the party if this 7%, 8% sustainable growth for the next 15-20 years is required. And the policy framework, regulatory framework is in place for this to happen. Now, once you have this twin engine of growth, where you have services, you have manufacturing, there is a impetus on exports. It is going to fuel a lot more money in people's hands.
I agree, because these clusters will crop up because of manufacturing for sure.
And then that trickle-down effect on the consumption economy.
It's interesting. I'm glad you said services will sustain. I won't reveal the name of the company, but they're doing $1 billion investment for AI-led services in Andhra.
Right.
It's phenomenal. When you read the press, they say AI is taking away jobs, but here are investments happening
Right.
in India because of its education system, for sure.
Right.
And I'm still sure another 15 years, nobody knows how the AI story will play out.
Right.
I want your quick thoughts on AI, because AI has made my life easier.
It
Because
has made my life easier.
you'd agree, right?
Yeah.
So I don't have to focus on basic writing anymore.
Right.
My research has gone further.
Right.
My designing skills have changed.
Right.
If I have to work with a writer, I work with him for research.
Right.
AI enables the writer.
Right.
And I'm sure for the brand side, all the brands that you speak to, how are they? I know they're, when they price things, they're pricing for these, young consumers. How do they use AI from the supply chain point of view, pricing point of view, and also say designing point of view, designing of the labels maybe? Do you have these conversations with them?
Oh,
Because this is a conversation I cannot avoid. So I'm having this with you.
Oh, absolutely. I mean, the basic tenet of our core philosophy of operating, Vishal, has always been that we need to live 5 years ahead in our heads. And interestingly, as a VC, we happen to be have the fortitude to go wrong.
Correct.
We can take a couple of bets that go wrong. That's baked into our business model.
I agree.
And therefore, living 5 years ahead is the only thing, because they're investing ahead of time.
Yeah.
And I can't imagine any company, forget a consumer company, but since you asked a question about consumer company, I can't imagine a consumer company in 2030
Not using AI.
that has not adopted AI as part of its operating model.
I hope all the new brands are listening to this.
I'm sure they are, and they are teaching us quite a lot.
Okay. You want to talk about that a little?
Absolutely. I think it's impacting all parts of it. So, like you said, it's helping you in content creation.
Yes.
So, first of all, Meta AI itself has taken away targeting as a problem from the desk of the marketer, which used to be a problem 10 years ago. Today, Meta AI says, listen, don't worry. You just tell me what you want to sell. I will target the people myself, open targeting. The targeting as available has gone to AI. Creative development used to be by hand. That's gone to AI.
Yes.
Demand planning for stocks, that's gone to AI. Inventory replication and supply chain management, which inventory goes to which warehouse and when, that's AI.
Yes.
In new product development, a lot of the research has gone to AI, saying, check out the reviews. What is the conversation in social media, networks? What are the searches happening? A synthesization of all of this data. A lot of the heavy lifting is done by AI to give ideas to brand builders on what products the consumers are looking for, what features
And also
the consumer.
And also the colors.
Labels, features,
everything.
Absolutely. That's gone to the AI. In the boondocks of building a company, the nuts and bolts of it, saying, your accounting processes, your procurement processes, your, procurement to cash, your procure to pay, all those systems, maker checker systems, all those systems is being now handled by AI.
Yeah, the entire ERP is running on AI now.
Absolutely. In fact, interestingly, ERP, since you picked that up, the big daddy of ERP is SAP and Oracle. And every founder that we work with used to shudder at those two words.
Yeah, because they have to be compliant with that.
Yeah.
And then they'll get money.
Yeah. And they just shudder at those, saying that, listen, nobody starts their business with SAP or
it's so expensive, right? Back then.
So expensive, clunky, difficult to implement, etc. And therefore, they'll never start with it. They'll start with a cloud of applications.
Correct.
Mostly stitched together.
Yeah.
Like take a Unicommerce for inventory management.
Yes, agreed.
Take some Clever Tap for some.
Some Zoho for CRM.
Zoho for CRM. And loosely API stitch them together, etc. But at some point of time, once they grow up, they have to migrate. And every founder is just shudder.
At the migration.
At the migration.
Yeah, I agree.
Saying that, next 6 months, don't ask me for growth. I am implementing ERP.
It was a cost center, massive cost center for them. Yes.
It is. But today I'm meeting founders who are telling me that, boss, why do I have to ever implement SAP?
Yeah.
When I have very robust, in fact, you talked about services, right? Interestingly, there's a founder friend of mine, she runs a company called Waymo. So she's a SaaS business, which is for field force automation software, which she sells in the US largely. She said that I'm retooling my business. I'm still SaaS. I said, what do you mean? She said, I'm doing service as a software, not software as
Yes. What does she mean by service as a software?
So in the AI world, it's all about agentic AI.
Correct. I agree.
And how do you create agents that can solve a customer's problem and service the customer in their own bespoke manner versus in SaaS, you would give them a product and say, now you
to tool it the way you want. Yeah.
Now you merge your process to match this product.
Correct. That's wrong.
And now the whole world is flipping to say, hey, this is my process. Give me an agentic AI. You come understand my process and give me an agentic AI that can fit into my process.
It's like almost like a consulting thing is back this way.
Absolutely. That's what she means by service as a software.
Yeah, and these agents are powerful. They're
Very
taking on the SaaS guys like anything.
So she's actually retooling her entire company to become an agentic AI company, saying, listen, ultimately we are here, we serve our clients. We're large enterprise guys. And if this is how they want to be served, then this is how we'll serve them.
Wow. So you want brands to think like this for the first check?
Not for the first check. Come on. They have to find a PMF. There are so many things. No, come on. But I think it's about a meeting of the minds.
Yes.
When you talk to a founder and say, okay, eventually they've started with a consumer insight. They've started with some pain point.
Correct.
They've created a product. And we say, okay, how do we scale this? How do we talk about this? That's one vector of discussion. I think the second vector of discussion is how do you build an everlasting enterprise?
Yeah.
On that, it is more a philosophical discussion at the first check.
Correct.
But
so you still go value that. The value of their
absolutely.
What they want to achieve, yes.
Absolutely.
But it's hard, man. I really wish the Indian founders don't think like this is me. I mean, I remember the world of trading where you worked on margins.
Yeah.
It's gone.
Yeah.
It's still there, but
so flat.
Yeah.
So flat. Yeah. Just very little left in that.
It's interesting now. I mean, that got me thinking that on so many levels, I can take this conversation for another 1 hour if it's just agentic AI. So that's how the world's changing with AI. The entire process is changing as you grow your company.
Yeah.
Let's talk supply chain because that's very important for me. I know you have Rippler as an investment. It's a fascinating company. How are the legacy guys now talking to you, saying, look, we want to change. If Fireside can start a consulting business for all you know, because of the knowledge that you guys have, how is the supply chain reinventing itself?
Yeah, I think interestingly, more than the legacy players, I think if you look at quick commerce and how that has challenged traditional supply chain.
Traditional guys are crazy,
right? So, for example, if today it starts raining, all your quick commerce guys will get stocked out on umbrellas immediately because this is my need today. I need to walk out of this building and catch a cab. I need an umbrella.
It really helps, to be honest. I've done such kind of purchases.
Right?
Be it I want a quick drink.
Yeah.
It comes in quickly.
Absolutely.
I need a toy for my son to keep him quiet. Quick commerce happens.
My kid has to go for a birthday party.
Yeah, I need something.
Return gift for the kid. Quick commerce, right? So
it's changed.
It's changed dramatically. Like for example, the Blinkit team, one part I was talking to them was telling me that one day in Delhi when the AQI hit, I think 500 plus.
That's really bad.
Yeah, that's really bad. But they sold more. No air purifiers.
Okay, at home
air devices.
They had this
appliances,
so they can produce
more than Amazon. In
That's
Delhi.
phenomenal because they can deliver fast.
Now, what that means is that your core supply chain design was based on a simple principle saying demand. So you first demand predict, then you manufacture, then you stock, and then you sell.
Yeah.
And I think that paradigm is getting challenged now. And we are saying, listen, there is no thing as demand planning. What you do is you create your manufacturing or production closer to your demand point.
Oh, they're changing manufacturing now.
Absolutely. And say you get your manufacturing or your production closer to your demand point because the moment demand comes, you don't have any flexibility for demand planning and inventory management because The demand comes today and is gone tomorrow. So now you have to design the entire supply chain not for predictability, but for volatility.
It's so
And the ability of the supply chain to manage that volatility can only be managed if you have production and demand sitting next to each other.
that's so different on so many levels. It's like micro manufacturing.
Yeah.
It's micro distribution.
Yeah. So you have SFG, which is semi-finished goods present all over your demand points. And based on the demand pattern you're seeing, you convert into finished goods and supply on time JIT. Because your dark stores can't hold more than
you can't.
a certain amount of inventory. Your mother stores can't hold. So that the supply chain teams that used to rely on saying, ki, boss, give me next 1 year forecast is gone. Next 90 days.
That's how you guys would work in the old days in the FMCG company.
Yeah. We used to work with 90 days. That's also gone. Now they're saying weekly.
And what about the payment cycles then? That's also going to change. We had credit cycles with these distributors.
Now you have long
that remain.
I think they will remain. I think you'll have long-term kind of settlement contracts.
Okay.
Saying here's an open escrow account.
Yeah.
They keep supplying. We'll debit credit that account depending on what
that will change. Okay. Wow. But the manufacturing revolution is going to change like this. So semi-finished goods.
Certainly.
The appliances side.
Whether it's appliances, whether it's FMCG also, I mean, whether your 50 ml shampoo or your 100 ml shampoo or your, shampoo bar is going to sell, you don't know. You have that SFG ready.
Yes.
Then support putting it in the right form factor and supplying.
That means your machine tooling changes. It's the size of the machines has to be new. That's good for Make in India if somebody can make such machines.
Yeah, I think it'll start to happen, right?
I mean, that's jobs. That's great to hear.
Yeah. I think this unpredictable supply demand cycle is here to stay because the same. You are challenging traditional belief, right? Like traditionally, what would you do? You would go and put some stock into a distributor.
Yes.
Then one part of that stock he will put into a retailer. Then one part of that stock goes to the consumer's house. Now, even if it's very hot and somebody wants to have a lot of drinks, the consumers come to the retail stores and empty them, but you have 2 layers of buffer of stock before that demand shock hits you. With q-commerce, it is like today.
Like now.
It's right now.
Yes. Wow, Vinay, I mean, these are profound. Have you done a white paper on this? Not yet.
No.
It's going to really change everybody's thinking.
We are still figuring out how the supply chain needs to be kind of figured out. But I don't think we have all the answers yet.
Yes.
So we're still kind of running micro experiments in our portfolio to understand what can work, what cannot work. So one of the things, for example, that we work with our portfolio is saying, forget about your entire SKU range. That doesn't really matter anymore. There are 7, 8, 9 power SKUs that really move or make or break your business.
Correct.
Those 7 SKUs cross dark stores, cross platforms. So like if there's Zepto, Instamart, Blinkit, 3 platforms, 1 city like Bangalore. Each of them have 40 dark stores. 120 dark stores in Bangalore. Cross those 7 SKUs. Which is about 840 variables. We need 100% stock availability at all points of time. You cannot be stocked out. Right? Start monitoring that to begin with. Interestingly, across our portfolio, that metric itself is at 35%.
Which is phenomenal. The fill rate you're talking.
Yeah, which is saying that more often than not, you're not available. So how will you sell? It's not about it's not even a demand problem anymore.
Got it. So they have to think about these things to make money. And we haven't even talked about customer experience.
Yeah.
Everybody's now
customer experience gets so somewhere a customer has remembered you and gone and searched for you on Instamart and you're not available.
You're not available.
In Hebbal or wherever that dark store is.
Think about it. Well-being nutrition, which is part of your portfolio. There's demand for that.
Right.
They're always stocked out. It's never available on these e-commerce side, these, Blinkit type stuff. So new categories again.
In fact, that's the second order of issue, saying that well-being, maybe their collagen will be available. So you don't want to buy collagen.
I want to buy something.
You want to buy
magnesium. Say
You want magnesium. Magnesium is not there. That's the second order problem. One is saying part of your top 7 SKUs.
Yeah.
Then there's a long tail where a customer like you is very specific. I want well-being nutrition's slow release collagen capsule. Now that's not part of the top 7 SKUs for well-being nutrition, but you are a customer who likes well-being.
What neighborhoods like this?
And wants Blinkit. So now, second order problem is for the next 7 SKUs, can you look at the top 50 pin codes and just be present there? So, I mean, there are so many problems to solve out here.
So who solves this? The AI solves this for you? The marketing guy should be super good at these things.
Yeah, I mean, the growth...
The traditional marketing is out.
Yeah, it's out. It's growth teams. It's very data-driven. So, this is not marketing, right? This is growth.
This is growth. Yeah.
This is growth. Where you look at data, where you look at what is the lowest friction with which we can delight the customer. And if that means that you have to run a brand ad, then so be it. But what we have realized is that the brand ad is the fifth thing to do. There are so many other lower fruit.
I quickly have to cover so many things in a short period of time. I have to cover sustainability. Consumption is growing. A lot of brands haven't thought sustainability yet.
Right.
I mean, if you go to a house today, thanks to Swiggy and others, so many plastic boxes. But if you have Indian grandmothers, they'll continue to use these plastic boxes. These recycled around houses.
Yeah.
You know, they'll send you sweets to another house. The same box comes back. Right. They'll do it for a couple of years before it's trashed. Right. How do you think we should, as brands, we think of sustainability?
It's a great question, Michelle. So, I don't know if you noticed when you walked into our into our office. We have our core, like an operating system of Fireside is something we call the value of good, right? So that's got 3 pillars in it. One is saying we'll always co-build with founders.
Yeah.
And we'll talk about that some other day.
Yes.
One is we'll always operate as one Fireside, which basically means that every founder, it's not like if Vinay Singh does a deal, the founder only interact with Vinay Singh. He will or she will interact with 10 other people in the organization. So every founder gets the same experience of Fireside. But we're also building a brand at the end of the day. That's one Fireside. We'll talk about that some other day. The third pillar is Planet First.
Yeah.
Right. What we believe is that eventually consumption and copious amounts of consumption has a impact on the planet, whether it's carbon, whether it's water, whether it's plastic. And we have only one planet.
Yeah.
And if you look at, so this is very interesting. And this by the way was a simulation I ran on AI. So I took the average per capita consumption of US customers and said, okay, if every human being on planet Earth had that kind of money and could do that kind of consumption, just given the number of resources required for that kind of consumption, including food, personal care, clothing, everything put together, how much resource will be required to power that consumption? And Claude's answer, not mine, was 3.5 Earths.
Oh, at this point of time.
At this point of time, if every human being on Earth consumed as much as an average US consumer consumes on a per capita basis.
As a per capita of $22,000 or something?
Yeah.
Yeah. That's
on a per, so they took into consideration the amount of plastic, iron, so resources.
Yes.
They said, okay, let's run the same simulation for Europeans.
Okay.
And I didn't...
For US, it's 3.5 Earths. So
3.5 Earths.
Okay.
Same simulation for European consumers was about 4 Earths.
Wow. I thought Europe was sustainable there.
No, man. Right? I mean...
it's crazy.
They don't use water, they use TP. Remember that?
Yeah.
We are much more sustainable.
Makes sense, yes.
Now, so as income levels rise, and as people have more disposable income, they want to make their lives better. and therefore they will consume more. And unless we find an answer in which brands and businesses are built in a manner that are responsible, and therefore they do good, they will not be allowed to do well by the consumers themselves.
Yeah, the one that
Positive
gets,
choices.
yes, correct.
Especially Gen Z, Gen Alpha, we'll talk about them. But also, they will not have access to responsible capital. There's enough responsible capital out there today. Public market investors, private equity investors, who are chartered with only backing businesses that are either plastic positive or water positive or carbon positive or all of the positives.
Sure.
And they typically have a lower threshold of return profile requirement. And therefore are for businesses that build more sustainable or sustainable practices, they're not only consumer positive, but they also are able to access capital that non-positive businesses don't have access to. And therefore their ability to grow is higher and their ability to compete is better. So it is not a good to do, it is a must do in today. That's our worldview on how we work with our portfolio companies. So we, you know this, right? Like last fund, we signed up with UNPRI and fund.
The third one, the second
one.
Yeah.
We signed up with UNPRI, Principles of Responsible Investing, where we picked up 2 big charters out of the many charters that they have. One was this Planet First thinking, and it's embedded in our investment process and an operating process. We also have our colleague Swati, who works with our portfolio just on solving plastic.
Okay.
Right? And then she has an ecosystem. And
so she'll guide the brands to...
So, I mean, on non-primary packaging, 100% of our brands have moved away from plastic. We don't use plastic. Tertiary packaging, secondary packaging is all non-plastic. Primary packaging, unfortunately, there are
there's no many solutions. Yes.
So, in 80% of the cases, we have moved to post-use plastic, right? Which is actually 75%. Most to post-use plastic, which is plastic that is not virgin.
Yeah.
It's been recycled and come back into the system. In those 25% cases where we have to use virgin, we use something called PCR, which is single layer plastic, which is easier to, recycle. Otherwise, separating layers and all is a very hard recycling task. What we also do is all of our brands, once they cross, I think about 50 crores of revenue, 100% of our brands are plastic negative. So they actually work with recyclers to recycle. They track how much plastic they use and work with recyclers to recycle more than that.
Wow. So you've thought about this very well going forward for your next fourth fund.
No, absolutely.
More of this.
Absolutely. I think this is the way of life. I think...
if India gets it wrong in the sustainability side, we'll probably be in 10 Earths kind of thing, right? In terms of the... right?
Yeah, I mean, that experiment that I ran, it included India's population as well. So, yeah, one Earth is not going to sustain all of us. And as India becomes more affluent...
Especially when it goes $4,000, consume more.
As we consume more, we have only one Earth.
Yeah.
And then we don't want conflicts arising because of resource sharing and we already have water fights breaking out all over the world. We don't want that.
Yeah.
And I think we need to take affirmative action ahead of time.
Yeah, I'm glad Gen Alphas are going to be more responsible.
Yeah, I think it looks like it. I think they are certainly better exposed.
Because they want better health. They're more fitness aware, that much. That's interesting. And
also, I think the education systems have evolved to a point where they're more cause and effect aware. Since that, I agree. They know that if they put a lot more plastic into the system, the microplastics are going to come back in the water and harm them. Yeah. So there is a whole cyclicality to life. I think we were dumb enough not to know that when we were younger.
I mean, the information systems have changed, right? We didn't have that.
Interestingly, there's this one founder who told me this. I said, okay, why are you so excited about AI since we're talking about it, right? He said, listen, when Google came, it kind of really challenged the education system because before that, whoever could memorize was the hero.
Hero
Whoever
of the
could
day.
memorize
Yes.
was the zero. And suddenly, information was democratized, and therefore zeros became heroes and heroes became zeros.
Yeah.
Said AI is about knowledge being democratized.
Wow, great. Complete.
Now suddenly, like let's say you had the exposure to have been exposed to sustainability as a subject matter, and therefore you're able to kind of mold that into your business or daily operating life, etc., etc. If I haven't had that exposure, AI, I can have access to the same amount of information you have, not only information, knowledge you have.
Yeah.
Or say, what is the so what of this information? What do I do with this information?
Yes, finally.
As you do.
Correct.
Through AI. And therefore now I think the interesting, and therefore I think there is a great time for new businesses to get created, because the fundamental DNA of a company or the fundamental operating system of a company, 10 years ago it used to be about digital first.
Yes. Transformation.
In consumer businesses, it was distribution first businesses, then became digital first businesses. Today, it's for consumer, yes, but for most businesses, that AI first businesses are getting created. And that, to me, is happening at the same time when a new generation like Gen Z is emerging, Gen Alpha is emerging, millennials are aging, they need new categories.
That's you and I.
That's new category. So, think about it. Think about a Venn diagram, right? There are new consumers emerging. Gen Z, Gen Alpha, aging millennials. The new categories they want to consume, like nutraceuticals or whatever we need. And it's happening at a time when the environment is rapidly changing. So new channels are emerging, AI, Q-commerce, etc.
Yeah.
Right? Put those three pieces together, that intersection of businesses that are getting created, who are targeting new consumers, wanting new categories through new means of building AI-first enterprises, accessing customers through new channels. I think that's what's exciting to me.
Yeah,
that's red hot for me.
It is. It's. Don't you think that these ideas will be profoundly young people will create this, but do they need people like you and me? That's the case.
For now, I can pretend that they do.
Yeah, yeah, because they can use AI for everything, right?
Absolutely.
Right?
I think certainly
they may need our money. They may get a credence, but
capital is always democratic.
Yeah,
right? Capital always will has a way of finding its self to the best ideas and the best entrepreneurs.
Yeah.
I don't think we are required for dispensing capital. That is not.
It's so many things that I can go. I mean, each of these things that you discussed, exciting as it is, we can go on for 2-3 hours, and each of these are different subjects that I want to come back to at some point. My last question is: you are into motorcycling, guitaring, and now wildlife.
Yeah.
And you're also a father, right? And how do you manage with all this excitement that's happening? You find time for yourself? Because if people watching this should realize India has changed, and with that, the time that you spent on this is also quite enormous, right? Do you get time to unwind? The wildlife thing also, you want to talk about that's your unwinding, isn't it?
Yeah, I mean, I think coming to work is also doesn't feel like work.
Yeah, because it's exciting time.
It's exciting time.
Yes.
So you're charged up all the time.
Yeah.
And now with the kids growing up, they have demands on time as well. I think certainly guitaring and motorcycling have taken a backseat.
Sorry for that. That's the case with everybody. Even me.
But wildlife is something that my kids have also gotten into big time. They love animals in the wild. In fact, we were traveling and we happened to be in Berlin, and I took them to the Berlin Zoo. And after 30 minutes there, my son turns. We are saying, "What kind of nonsense?" He's like, "Can't see animals caged up like this.
Yeah.
Let's just get out of here. This is not my scene at all."
Yeah.
So they like seeing animals free and wild in the jungle where they're supposed to be.
That's your Gen Alpha. I don't know what would they be in which category, but they are thinking like that. That's
They're
great.
thinking like that. And so that becomes like a common thing with me and the kids and the family to do together. And highly passionate about.
Is that what drove you to be part of wildlife kind of thing, communities?
It started as, to be honest, just getting out of the city, breathing great AQI air, and just the peacefulness of a jungle was what called me to begin with.
Yeah, the AQI is there at 20.
Yeah.
Think about it. In Bangalore, it's 110, maybe I don't know more.
Yeah.
But Delhi, 500, what are we doing?
So it started with great AQI air and peacefulness.
Yeah.
I think then my partner, by the way, Dipanjan, is an avid photographer and a birder.
Okay.
So a couple of trips with him to the jungle, I got into photo.
Yeah, I've seen you with a big camera a couple of times.
Yeah, I got into that. And then my son picked it up, and now my daughter's picking it up.
Kids are growing. I mean, last time I saw them small.
They're really tiny,
No, this is phenomenal. So all the best to you. And each of these topics, at some point of time towards the next 18 months, I'm going to come back. There's so much to discuss.
Absolutely.
Right?
Absolutely. There's so much of excitement. In fact, we started looking at, really young companies, Vishal. We never used to do pre-revenue companies before as a strategy.
Agreed. Yes.
But because of these three seminal trends coming together at the same time, I think we are super excited with what's in store.
Yeah.
What's most interesting is, while we're seeing new consumers, new categories, new channels coming together, I think founders are seeing them before us. So the quality of the founding teams, like, your typical alpha person who would have gone to one of the top colleges in India, worked at, let's say, a Flipkart or a Zomato, or has the relevant work experience. In 2018, when I used to catch them and say, okay, what's your next gig? What are you going to do? Most of them used to say, I'm building in consumer internet.
Correct.
Today, that same quality of talent, when I speak to them and say, what are you going to do next? They want to build brands. And when we looked at that and combined the opportunity with what we saw in the entrepreneurial community, we said, listen, we got to then jump in earlier. We don't need to wait for revenue. As long as the product is proven, prototype, etc., let's partner with founders early enough. So last year we started a seed program.
How is that right?
It's phenomenally well. We've done about, in the last year, 11 companies in the early revenue, pre-revenue, whatever we call it.
That from everything,
it's not
shoes to healthcare, shoes to healthcare.
Everything. It is business as usual for us. Okay. It's not a cohort-based thing. It's not a...
it's not a finishing school.
It is a core business for us.
Got it.
And we've had the opportunity to partner with the 11, 12 founders, continue to look at more. And 8 out of those 11 have gone on to build a larger business, raise their next round of funding.
Yeah.
And just the pace at which these businesses are growing, and they're using lesser and lesser capital to get there, I think that keeps us excited.
Okay, this question is for you. I know when you guys met when Kamal and you met in 18, the hypothesis was to create these 15 iconic brands. I know there are a few in your portfolio. Have you got to that? Will you get to that 15 number sooner than you think? Because that's a metric the legacy media will hold you to.
Yeah.
Will you get there? I mean, is that a number that you want to live by at all? Because with this conversation, I realized there's only acceleration in Indian brand consumption, brand building and consumption. So it will not stagnate.
So we have raised our target to 35.
Oh my God. Oh God. Somebody's got to pick this up and hold you to it.
Please, we would love to be held responsible, because we actually see the opportunity for that to happen.
Okay.
For example, Vishal, we were always talking about discretionary consumer products, right? Post-COVID, we started investing in, consumer preventive healthcare. Well-being nutrition is something that you also familiar with.
Good bug,
Traya, Gynoveda.
Yeah.
Today, we are looking at this consumer wellness and healthcare as a new vector of
huge
business building.
A huge category.
Which we had never even thought of when we started.
Yeah.
So this revision of 15 to 25 is not because, obviously, there's a growth in the number of opportunities within our core of discretionary categories with, their emerging consumers like Gen Z, etc. But then these new categories that are emerging, which were never even thought of.
Yes.
We talked about in the past, we did 2 gaming investments.
Yeah, that was something I missed because you were right. Young people are on games all the time.
Yeah. And the next 500 million Indians, India too.
And that too in rural settings. Absolutely. Games. A lot of...
They're on the internet, not yet shoppers. They will start their internet commerce journey through microtransactions.
So 5 rupee, 10 rupee.
5 rupee, 10 rupee through UPI.
Yeah.
We are seeing these short video platforms coming up. We've not done anything there yet, but obviously keeping an eye on it.
I mean, UPI has changed everything.
Absolutely.
The way you consume.
I was talking to one of the founders the other day. He has 22. We're just curious, okay? So we both whipped out our phones and we said, okay, how many UPI autopays do we have?
Yeah.
Do you know how many UPI autopays you have?
I don't know. I have lots.
You'll have lots?
Yeah, I have lots.
He had 22.
I mean, today morning I woke up, it said Amazon paid, Netflix paid, and then there's a notification for everything. I think it'll be more than 20 for sure.
Yeah.
100%.
Yeah. So UPI autopay has changed the game.
Yeah.
Right? So we are looking at these new areas of consumption at all points of time, saying, we want to be present wherever India consumes, right?
Yeah. It's strange that it's worked that way, Vinay.
Yeah.
This autopay revolution will be great. That I play this game daily.
Yeah.
Autopay this.
Autopay. Right? Like there's lots of these short video formats that are coming.
Yeah.
They're dependent on autopay.
Yeah. We were talking about that earlier. It's going to be a revolution.
Yeah. That's changed.
Would you watch a 3-minute video? Oh, a 3-minute movie? God, that'd be crazy, man.
But the Reels revolution, we saw that coming, right? Yeah. And today, by the way, if you open YouTube on your phone,
you see more Reels than the main.
It automatically goes to Shorts first.
Shorts, yeah, absolutely.
In fact, if you want to search for anything, you have to get rid of that and then get the Shorts.
You see, for example, my wife comes from a previous generation. She's a few years younger than me. And her phone is always the Shorts.
Yeah.
Mine still has a long phone. You understand? It's true. The algorithms are making it happen for these guys. Man, what a change. What a life. Yeah. I mean, in 8 years, who would have known we'd be having this conversation? Yeah. But hopefully we'll stay relevant.
Hopefully we'll try.
Then the new categories. Well-being is something that I like. Magnesium and, this fish oil, omega fish oil that's coming in. This new, what do you call, I don't know what supplements.
Right.
These things are changing my life for sure.
Nutraceuticals is a big new area. I think the next leg of revolution will be through wearables.
Healthcare and wearables?
Healthcare wearables or wellness wearables.
I hope the insurance industry wakes up. It's been a while now.
They are. We're starting to see some, in our portfolio, Fitterfly is starting to work with a bunch of insurance companies. Inito in the US is also.
Yes, Inito now, yes.
So I think it's starting to happen. Livongo is working with them.
So there are people targeting us as well, which is good.
Absolutely. So there are these new pockets of categories that did not exist before that just built.
I definitely want to come and see your seed program and meet these 11 new companies in the categories of the future.
Yeah, I'd love to get you in with Prayag and...
I want to see that, man.
Yeah, great.
On that note, Vinay, I hope to meet you in a forest sometime soon.
Likewise.
And all the best.
You saw the bear and I did.
Yeah. But, imagine, Karnataka is beautiful. You've been traveling across India now.
Absolutely.
I definitely wish you all the best. I wish the best for Fireside Ventures. Because I would say at the time, nobody wanted to bet on Indian brands.
Yeah.
And today you go to an Instagram, all you do is find the Americans come and say, boss, you have category for everything. You have a choice. For example, a Gambol costs you $150. You have the same looking shoes and the same quality at say $30.
Right.
How do you beat
Yeah.
that? So it's happening in India.
It is.
And it's happening with Fireside. Thank you so much.
Thank you so much for having me, Michelle.
Thank you.